So it's doing the opposite. It's letting its holdings of MBS, mortgage-backed securities, run off at the pace of the pass-through principal payments. So this is the people who are paying their mortgages. There are servicers out there that are collecting those funds and passing that through on those securities to the owner of the security, which in this case is the federal government. They are letting that run off. And the Fed said repeatedly that it would let the entirety of its balance sheet, they want all the MBS to run entirely off its balance sheet, even after quantitative tightening ends. And they're going to replace those mortgage-backed securities with treasury securities.
If you keep reading, you're going to upset people.
I know, likely with T-bills, and here's where it's going to hit.
Here's the thing.
Which would take years, and it would keep the spread wider, all of which will put upward pressure on mortgage rates.
Upward pressure on mortgage rates.
Upward pressure on mortgage rates. But guess what? Perfect storm for us out here in the real estate world is that we have, our inventory is really low nationwide.
Still true.
It's coming up, but people are realizing that prices are not going down. They're not going up as fast as they were, but they're still going up. And I hate to tell you this, folks, the interest rates, this is it.
Well, and you're starting to see some mortgage, when they're tracking applications, you're starting to see a number of apps creep up as well because people are getting to the point of, is this what I should buy? How cheap is this house going to be? Is now the cheap time? Is it going to get cheaper in the future? These numbers would lead me to believe that you're going to pay more in interest or price, potentially both.
Absolutely. I agree. I think that's how it's going to happen. And
we have an interesting strobe light going on.
Yeah, we do. Yeah, technical difficulties, it happens. So we're stuck with this. And the longer you wait to buy a home, the higher the price is going to be. So saying I'm going to wait a year and the price goes up 20 grand and now you're financing an extra 20 grand.
But you do have a second bite, so to speak, at that interest rate.
And if the interest rates come down, you buy a 6.5 and they come down to 5, absolutely refi.
Absolutely.
If the interest rates come down and you can afford higher payments, refi to a shorter mortgage. If your income goes up over several years and the interest rates come down a little bit, refi to a shorter mortgage. Maybe you love your home, you don't want to leave, you just want to pay it off sooner or you want to pay less interest. Increase the payment when you do the refi down to a 15 or a 10-year because the interest rates on those are much lower, right? And so the savings in interest means more is going towards the principal that you still owe while your home is still increasing in value. And everybody says, oh, it happened in 08, it'll happen again. Prices didn't really go down in 08 and 09, right? They were increasing because in the investment world, realtors, mortgages, investment professionals were telling people, get in now while the interest rates are low because what's happening during COVID is going to lead to an increase in interest rates in the future. We knew inflation was coming.
Oh,
and we counseled people appropriately. And so demand skyrocketed, but there wasn't inventory. And so prices went up. It's artificial. It wasn't based on anything. There was no foundation.